44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share this video. Well, it's good to be back. Looks like I can do Tuesdays. I'm not sure how many of them, but anyway, I'm here. So thanks again for showing up. In tonight's video, I'm going to discuss what I think is going on with the Fed and what we're looking at least for the next several days as we go through this week. Let's go ahead and get into it. Okay, folks. Yeah, Todd, you're right. 2 times. I'm going to try to do Tuesdays. It looks like that's somewhat clear going forward. So at least we'll get in one a week. And do me a favor, folks. If you're a regular watcher, we get 4,000 or 5,000 views of this. We should be a lot more. But hit the like button. And the reason why I tell you that is I'm trying to make a comeback here. And a lot of people don't know that I'm doing videos again, so let's get that lit up. So let's talk about tonight, and I've got a fair amount. I'm going to try to go through a number of markets. I haven't covered crude oil for a while, haven't covered gold for a while, so we're going to get through the spectrum the best I can. The good news is, because of the time change, I now, not officially, but I live in California based on the clock, and even though I'm in Arizona, we don't change our clock, so it is the servers are actually running, and we should be able to talk a little bit about the output of the WaveTech database here, but go through it. So I think it's kind of interesting. I came up with this headline tonight, and it was, is the Fed a lame duck? And I think they are. I think they've lost all their power at the moment. I mean, what are they going to do? They're not going to lower rates. What are they going to say? Trump has literally sucked the power out of everything, it would appear anyway. That's the way I'm seeing it. I mean, what are they going to do? Everybody knows, well, they're not going to lower or raise rates tomorrow. They're going to just, try to jawbone things. But what are they going to jawbone them? I'll go through tonight through the treasuries as well. And we'll talk about the yield curve, because those of you that follow me for a while, read my Substack, you know that I've been talking about this yield curve going flat. And I've got a chart. I'm going to show you where we were at the beginning of 2024 and where we are today on the yield curve. We'll do a comparison. We'll talk about that, and I'll unpack some of those thoughts as we get into that. But I think the interesting thing here as we come into the Fed announcement tomorrow, like I said, they have nothing. In fact, it appears that everything has been flatlined. We did see a 10% correction. That's a good thing, I believe. I don't think we're just coming out of this. We are seeing, we'll see what kind of traction. We got some traction on the short-term database. I'll go through the database. I'll try to do our usual old school layout that we used to do. And I would also like for you folks to comment on what you'd like to see, try to make a bit of a comeback. Like I said, it'll probably be once a week. Mondays don't work for me, but Tuesday seems to work. So we'll see if we can keep this going. 1,000 likes will go a long way, so make sure you hit the like button. All right, so let's go ahead and start to dig into. Let's just start. Usually I go with the S&P. Let's start tonight, and let's go with the Treasuries. I'll bring that up here, and let's get into. Let's get into that and just take a look at what's going on there. So I put up the 10-year Treasuries, and this is a weekly chart. I'm going to try to do some analysis on the weekly chart, as well as going down into the daily, but the weekly chart is still showing. It's interesting that we're seeing that interest rates are forecasted. If you see these dotted lines here, these are the WaveTech machine learning. This is the projections to the future. I think really what we're looking at is more of a range here. You can see the red dot indicator here. Let me bring that up full so you can see that. You can see it's kind of forecasting down here too. This is weekly. If we flop this over to a daily chart, you're going to see the same type of formation. Now, I talk about this a lot in the past, but I want to bring you folks back into focus here. Is that one of the things? This is like a classic pattern. I kind of, I'm not a big fan of trend lines, and the reason for them, I draw them, so they're subjective. I think you have to watch out. I know a lot of folks use them. I haven't used the trend line for a very long time, and in trading, I haven't used a stop for 30 years. I someday I'll do some live stream stuff here on trading, but this little wedge that's here right now is actually based upon the projection part of it. This right here is the live section of the moving averages right to this last bar, but you can see that formation. I talk about that wedge that gets built. This is the 200-day moving average. It's kind of a floor right now, so I use moving averages as trend lines versus me drawing trend lines. They're drawn by the markets. And then these forecasts that we're seeing out here are right out here are what might happen in the future. I think once you get behind maybe 3 to 5 bars beyond that, it's just fantasy, but it's nice to see what it could look like. And a lot of times, if you have the indicators, then you know that a lot of times these patterns really play out as you go through the scenario. So what we're seeing here is Treasury's kind of flattening out slightly down, but this is the scenario that I've been talking about. Probably we could go back maybe 2 years even, but let's go to the yield curve here. These guys want to get paid. Okay, so this right here, let me go off screen for a minute. This right here is this is a site called U.S. Treasury Yield Curve. I like it a lot because the red line is where we were, and this is the shape of the yield curve in the beginning of 2024. The blue line is where we are now, and if you were hanging around, I was just going on every day after day, or anytime I brought up the yield curve, I would bring up this scenario that ultimately we'd see the Fed funds come down to around 4%, and we draw a flat line across the screen. That's basically what's happened. We got a little bump at the very backside of the 30-year, but this is what I forecasted, but this is what the Fed wanted, because this is as neutral as you can be, right? There's no inversion. You know, the inversion was supposed to cause a recession. We never got that. And I argued against that because the reason why there was an inversion was a false inversion. And the fat inversion in the past, when we had inversions in the yield curve, they were driven by market forces. This was manipulated by the Fed to look like they did. And it's very different if you go back and study different times when those things are happening. Yeah, these guys have been more aggressive about getting paid. They should, as far as the ads go and stuff like that. But this was the scenario. Let me just bring this up again. This was the scenario that I was talking about here. Oh, nice. Okay. It's not letting me float up, but basically I was looking at where the blue line was. We just flatline it. Going forward, I still am expecting to see a couple of drops in the yield curve. I also have been talking about, I think there's a potential for at least a negative GDP in Q3. It could carry to Q4. We could get a technical recession here. That looks fairly likely. And whether it's tariffs or just the, I guess, realigning the economy, that's one of the things that happened. I was just on Twitter, and some guy was talking about how Trump and somehow Elon Musk, who doesn't have any power of anything, have destroyed our wealth and all that stuff. I don't see that wealth has been destroyed. Market came off 10%. I'll show you a couple other things that have happened that I think are part of the forces that we're seeing of the realignment of the economy is the best way to put that. Okay, so let's come back and let's come back now and let me just set up our next section here. So what I'll do is I'll go through the S&P, NASDAQ. I'll try to get through that. I think we need to talk about the Russell. I'm going to try to really roll through this as fast as I can. You know, I've been arguing for, I don't know, a year and a half. The Russell may catch a little bid. It did manage to make an all-time new high, but it's just been rejected. These stocks in the Russell are just not going anywhere. And anyone that's played that scenario finds himself way behind the power curve from the standpoint of returns. And I've seen, you know, we still have a fair amount of institutional clients, and, you know, too many of these folks get tied up into these things. Guys like Tom Lee, don't think they're very good managers. I looked at their funds. I don't see anything special there. But he's one of the folks that they roll out. If he loves Bitcoin or he likes small caps, they roll him out, and he tells you how everything's going to double and, you know, Bitcoin's going to a gazillion. Maybe it is. I think when you start to get in these long-term projections, you get yourself in a lot of trouble from that standpoint. I do some longer-term analysis, but it's more of a perspective. What does it matter what you think things are going to be in, you know, 2027? It doesn't. You can't trade 2027. You've got to trade right now, and so you need to always stay focused. Those of you who've been around the channel know I always tell you trading is like being on an old country road with the no moon. You can only see as far as the headlights will let you go until the next corner. So you're always just looking for the next corner and how hard you have to turn and pay attention to the changes in the road. There's not much more you can do than that. I mean, you can talk about the long term, and I'll talk and do some projections, but in the end, you walk forward all of this analysis. So no one can predict the future. I don't think I can. I think I can do pretty good for, you know, 3-4 weeks, maybe a couple quarters. I have a pretty good handle on things, and we have something unique, and I'm going to go through that next. I'm hoping that when I get done talking about the S&P here in just a minute and get through the equities, I'll come back to the database. So make sure I do that from that standpoint. Okay. So let's go ahead and we'll start with the E-minis. And this is daily. Let me bring up the indicators. One of the things that I was talking about in last night's Substack, that we get 3 days, we'll get these patterns off these lows where you get 3 bars up, you get 2 down, and another 3 up. And what this scenario is that I'm playing out here, let me just bring this up and draw in what I think is going to. I've had this trouble before, folks. Bear with me. Let me just come on screen while I find this. This tool, there it is. I've found it. It floats in the back of things. So let me just. Okay. So what we're looking at here is the this configuration is, you know, you could argue that this thing was just straight down, right? This was just a collapse. When you get that, a lot of times this could be what we could get something like this pattern here to set up, and we ultimately go up to this 40-day moving average, and then you get a rejection, which would be right around the 200 again. Now that we're trading under 200, and you get another leg down. So we're not out of the woods here as far as okay, we got the bottom, now you can go, and we're going to an all-time new high. That's not, in my opinion, what's going on here. We'll go through a couple levels of charts here, but this pattern here is fairly likely. But let's break it. Let's go to the Old Country Road. So we got this little move up. You can see the red dot forecast tool is showing this right shoulder setting up, and then you should come up to these levels. Now we got the 21 day coming in here. That's going to be a resistance or a point of rejection, and I'll show you some of the numbers on the PPMs here as well. So let me clean this up. So when we look at the PPMs, we're seeing a couple things. We're seeing expansion projected. These are not real numbers. These are projected numbers. And what we saw in this way down, we kept seeing these V bottoms being projected, and every time they just, it was like it was moving the scale over one bar at a time, because we were getting these daily patterns where we'd open higher and they'd slam them at the end of the day or early in the session, but we were ending up most of the days down. I think I figured of 13 days, we had 4 days that were positive in that pattern. So what we're seeing here real quick is it's showing that there's going to be a loss of momentum, which means this, and it's being forecast here, that the 10 period moving average will flatten out. The 21 is also being shown that it's going to flatten out. But if you look down here at the 40 where my cursor is, you'll see it's not showing that it's going to recover. And I'm all the way into the end of April where my cursor is right now. So what that's telling you is that downward slope on this 40 period moving average is going to be a big resistance point. And the longer we go, the closer we get to the backside, what I call the backside of the 200. So once you trade under the 200, you'll trade up to it. We basically almost did that in yesterday's action. Now we're pulling back. We should get another move through that. I think we hit this 40 period moving average. We probably go back over the 40. And what you'll see in the Substack is you'll be able to see, I'll be talking about coming up to that 40 and getting rejection off of that. But for now, we probably have a short-term bottom. Everything's trying to work its way through. There's probably maybe 2 sessions down, which, if you think about it, goes pretty good. We'll see if Jay Powell has anything left at all, or if anyone even cares what he says. Trump's threatening to get rid of the Federal Reserve, and there seems to be a little rift between them, to say the least. I'm still convinced, and you people know this, is that the 50 basis point move last September was total politics. I mean, it couldn't have been more obvious. There was no reason to do anything or any action that they've done since. So nothing seemed to work anyway for those type of things. But the point is that this is the pattern that's setting up. The real quick, I'm going to flash over to the weekly, and then we'll move on. We'll go to the NASDAQ. I'll start to get some momentum. And so you can see here as well, it looks like another week down, which could be next week. Maybe we get a little rebound. There's going to be some pressure reemerging on the weekly. So the weekly, as we're a ways away, we're probably going to get range bound. The lows that we printed on here at the 59.09 level is probably about it for now. So we'll get a consolidation, and you can see at least the forecast is for this to go up. And like I said, we're seeing everything starting to line up that way. So let's go ahead and let's go to the NASDAQ. So a couple of things that same pattern on the weekly. We can see the WTARs. These are the forecast over here, these dotted lines. Those are the forecasts for what the moving averages are going to do. And basically what's being forecasted is a consolidation. Now, that would make sense. I don't think there's any reason economically or anything we know at the moment that is going to change that. On the other thing I would kind of add in here, ad lib from here when we're looking at these indexes, what Paul, I think Trump is again playing chess. He made sure that the tariffs come in between Fed meetings. Okay, so they're not going to have any purview on anything that's happening with the tariffs. You know, Mexico and Canada, but we're talking about Europe and a whole bunch of other things that are going to come into play. And the Fed's not going to be able to make any, if they are, I'm doing air quotes, if they're data dependent, they're not going to be able to make any decisions about tariffs or their effects in this meeting, and they won't have another shot at it until we get to June. I think it's kind of interesting that the way that Trump has played this out. Let's start him on a second. That way Powell and all these other guys won't have any shots to disrupt the normal flow. And I think what's happening here is we're looking at really just the normal flow of how the markets are going to come in and reconcile these things themselves. You know, I think we have a little bit of a higher emotion in the markets right now, and are very sensitive to about any kind of story that comes out. So, but the weeklies are similar. Let's go to the daily. This is daily NASDAQ now, NASDAQ futures. Yeah, it's good to see everybody in the chat, by the way. Yeah, hit that like button. I need 1,000 of them. We want the algos to see that you guys are happy. If we get 4,000 or 5,000 views, I mean, that's 1 out of 4 of you. Just click the button. Do it right now if you haven't done it. But anyway, as we go through the NASDAQ daily, this was interesting. I haven't. You folks that have been around me know I do these live streams. I used to like doing where I would produce the videos and upload. They're 15 minutes. This is an hour. And I'm working on getting the ability to tag the video a little better, so it's going to be interesting. But this just came out today. We have a new Fibonacci target just popped out here today, which is suggesting, let's take a look at that. High target 1, 20,696, 21,289. Can you guys see them on the screen? I don't think so. Let me see if I can move that over at all. Yeah, it's not. Bear with me 1 second. I'm going to see if I can get this so you folks can see that data. Okay, it's right here where my cursor is. Let me just move everything back over here so you can see it. But there's the number. So we do have new Fibonacci targets, but just what I was just telling you. So let's blow this up so we can look at it. You can see these 3 dots here are the Fibonacci targets. So there's an algo in here with this indicator. If we look at the indicators, they are recognizing patterns and then doing Fibonacci targets. So here's what it's saying. And so it's seeing this pattern here, and it's projecting up here is doing fib target 1, fib target 2, fib target 3. But look what's in this play. This is that same wedge formation that I was talking about. So we have the 10 period moving average being forecasted to come here. So we should get maybe a dip down. Maybe we'll get a 0.382, maybe a 0.5 retracement of this move here. Let me move this stuff out of here. So what I'm talking about here is from this low to the high of that we did today in Tuesday's market. Then we come down, set up the right shoulder, and then we get this move up. But I think what we get stopped by that 40. It's the same scenario that what we're looking at from the viewpoint when we're looking at the S&P. So same play from that standpoint. So I'm going to keep moving fairly fast. I'm trying to look in. Yeah, I'll get through Bitcoin as well. Yeah. Larry Williams is older than me. I don't think there's any need for any. Hey, listen, maybe that's just a magical low. I'm trying to get rid of a bunch of stuff. Maybe that's this is the low. Like I said, right now, this is a trade pattern that's setting up, and that's more important than trying to smart money. I don't know what that is. Okay, I've been around for almost as long as Larry. I've done conferences with Larry back in the 80s or 84. I met him many years ago. But the point is that these are areas where there's definitely a trade setting up, and that's what I'm trying to tell you here, is that we should get another day or two, and there's probably a bounce up to these values here. But as far as all-time new high, this is your ultimate buying point. It could be the 10% correction. That was it. We had, just using the S&P, there was a 52.5% compounded rate of return, 23, 24. You're going to get some retracement. We got 10. Okay, maybe there's more. Maybe there's a bounce. It looks to me that on the weekly, like I said, we could have a whole nother leg down yet. I don't think we're out of the woods. I think there's quite a few things that are likely to come. You know, who knows? Do we get like a deal with the Ukraine? Do they stop killing people, or don't they? Is there escalation that comes out? No one knows, right? I don't know. All I know is these patterns. Like I said, this is as far down the trail as my headlights can see. Okay, I could make up some other scenarios, but it doesn't matter. If those other scenarios, and this is a big bottom, we're going to figure that out. If you're doing a walk forward process like what I do, you're not going to be left behind. And like I said, I'm going to go through this. I'm going to do the Russell. I'm going to back up and hope that the WaveTech database is updated, just so we can see what kind of rotation is. I like I always tell you guys, I'm in a very unique position because I watch 15,000 symbols every day. Most people look at some indexes and make some stories. So there's a lot of stuff going on in the background. We saw further attrition. I'll save it in the database. I'll save it for that. But this pattern is real, and I think we get something like this, and we come up. Depending on what the timing of this is probably the wedge that we will look at when you go through Bitcoin. If you've been following me on Substack and what I've been talking about Bitcoin, it really just adhered exactly to the pattern that it should have. So anyway, enough of that. Let's go ahead and do the Russell. And I'll use RTY. I just like the futures so we can get some feel for this. Let's bring this up so we can. So similar type situation. I'll bring up the drawing tool just to point this out. But here's a couple areas that I think are important to pay attention to. This is what I was talking about. You can see in the Russell, you've got the PPMs expanding. Let's try to, here's ppm 2, which is the 1021 pair of moving averages. When you get down to ppm 3, no momentum changes where it looks like we're going to start to see it. Maybe they get positive. So let me draw this in just next level so you understand. And listen, if you don't have the indicators, all you have to do is go to kendallreport.com, WaveTech, and you can get that. And there's a lot of instruction videos and things of that sort. But you can see here also, this is the pattern that's being forecasted here on RTY. It just, this is a daily chart. I'll bring up a weekly here in a minute. But let me draw in what I think is, so here's what I'm talking about. You got upward expansion. These are forecasts. They're not actual. This right here is the, let me get the last bar here. So where I just drew this line down, sort of not exactly straight, but you can see this is where the line's cut off. Let me redo it. So right about here is where we're seeing the cutoff line. All of these other dots here are forecasts. So will that happen? I don't know, but it's reasonably accurate, depending as long as we stay into these patterns. But like same thing here, you got this big wedge building here between. Let me just get rid of everything here real quick. I have to. So, but here is the wedge. Like I said, I don't like to use moving averages. I use 10, 21, and 40 and 200-day moving averages, and they're simple averages. They're not weighted. Don't need to change the math. Just a simple average will get you right there. And you can see, like, even on some of these things, I just point out a couple of things here. So this analysis will touch home with you just a little better. But here is the let me make this just a little thinner. Right here is the 10-day moving average. So what you'll see here on the 10-day, I drew a straight line, but right here was a mark where this rejection came from, and then we're finally getting to the pattern. This is what the 10-day is attempting to do, is to set up this bottom, and you're getting these things usually roll over, and then you get this formation here. If we look out, this is what's being forecasted. From the standpoint of this pattern, what we're looking at is the same pattern that we're seeing on all of the indices. They're all going to follow along at some point, right? And some relative relationship here. But the bottom line is, we're probably looking, this is what's being forecasted for this coming up and hitting this 40 as well. So everything across the board of indexes, just at different, one's going to move a little bit more than the other, but all of these patterns are lined up. And typically what I like to do is to find these clustered ideas that will ultimately give you a much higher confidence level that your analysis is working, okay? And so certain things have to happen here to confirm. So we should get a couple of days down. We should retrace, somewhere between, say, 0.38. Let me just draw this in for you, those of you that are new. So once you get this, we should come up here and we should draw back to maybe a 50% drawdown. If we go much below like a 0.66, it's really a GAN number, but that's using my failure point, where if something retraces more than 66%, then the pattern's probably going to fail and it's probably going to make a new low. So that's kind of my drop dead point. Okay, it's got to hold 66, and you want to see even a bounce off of there, some kind of rejection off some support where you get a a rally back and you get a higher close. You need to see a number of things. Like I like from my analysis, what I like to see is multiple things. And I don't use candlesticks. I actually don't like candlesticks. I just like the old-fashioned bar chart. And that's really the best pattern for me. It's because I've been doing it for almost 45 years, right? And so, Steve Nissan and I, that was really made candlesticks famous, worked at Merrill Lynch together when Steve was writing the book. We were both working at Merrill at the time. But the bottom line is that these patterns that are setting up seem to be consistent across the board. I would, and I'll be writing about this in my Substack. So if you don't get the Substack, it's $8 a month, and there's a 7-day free trial, so you can see everything. And I usually do one to two free versions every week. But this is going to be what I'm talking about here. Okay, there's not going to be much to get around this because these patterns are being very, very consistent from that standpoint. All right, let me close this up. And so when you start to see patterns, especially when you're looking at different things, these patterns also evolve in stocks as well. I didn't have, I know some of you were disappointed that there wasn't the fact sheet data sheets that I've been putting out, but I did run one of the sheets. I'm going to see if I can find it real quick. We'll go back to that. We'll just get through. All right, so we covered so far. I'm going to go back to the database now and just see what's happening. Let me update this. Everything should be run now. It is. Let's take a look and see what we can find out. Let me get off screen here. So we're going to go, if you have WaveTech, you can go here and you hit research, you go to daily, and you get the daily output. We're right at that. Those of you that may be new around here, but this 42% is the minimum level that you get when you're looking at some potential for a bottom to form. So everything I just did in the report, going through all the indices, looking at the patterns, here's another confirmation. We're at 42% short term. That tells you we should be able to grind out a little bit more of a low and start to see the markets move up. I suspect that no matter what Powell says tomorrow, it'll probably end up to be fairly dovish. It's not in his style to normally say stupid stuff that's going to crush the markets. But so this is the other thing. We were down to one sector long. We were 2 yesterday. We're now at 3 sectors long, and one of them right here. I'll just highlight this. I think you can see behind me. I'm not sure these numbers are easy to read, so I'll tell you. This particular trade's been on for 42 trading days. The typical holding period, this is a short-term model, is 45, and this is pretty typical. There we go. So if we look at some of the metrics around this sector on a daily, we're looking at right now that it does a fair job. This little indicator up at the top here. This what's nice about the WaveTech is that it tells you how good the model is on this particular symbol, and it's fair to good. It's not a great model, but it does give us some pretty good metrics, and you can bring up all the trades and stuff. And I had somebody, so hopefully you're watching. If you want to get information, there's this link tree So you can go to Linktree Kindle /Kindle report, and you can get to this. I believe it'll be in the description when I update the for the replay of the software. So you can get the indicators, you can get Wave Tech here, you can follow me on Twitter, and also you get the Substack. All those links are right there. So that will hopefully help you out. But back to the database, what we're looking at here really is, let me just go back to the main page here, is a holding period of around 34 days. The healthcare has been long. It's been profitable, not hugely profitable, but it is profitable. These are sectors, so you can drill down and see exactly what the sectors are. Like healthcare has, just take a look at this. Healthcare has 269 stock symbols in there, so you can break it down even further by groups, and you can see every symbol that's in there, the P&L. You can see all of this stuff. So there's 15,000 symbols in here. It's $97 a month, and it gets right now there's no trial. You just get charged $3, and I think it's $3.80 a day for this platform. But you can get trade signals on all 15,000 symbols, U.S. only, just so you know, and ETFs, mutual funds, and individual stocks. So, but the patterns that we're seeing out of here is confirming by just going back to this daily. If we go back one more level here, and we get to the daily database as the universe, it's got 14,731 symbols, 6201. Long right now, 42%. So there's quite a bit. Like I said, 3 sectors. So you don't have to wait till tonight's Substack to get that. I put that in the Substack every day. All right. So where are we at here on time? Really good job. I'm proud. So let's go back and let's go next. And I haven't covered this for a while, but let's look at crude oil. And this was kind of interesting. This was the last gasp of crude oil before Trump became president. This is January 15th. And literally 5 days before Trump came in office, we went from $80.77 to right this moment to $66. So crude's off $20. The patterns that are emerging are still kind of stabilizing here, and this has been a story. I'm flashing back to my previous coverage. Is this around $62 is about that $60 range is the bottom of this range. In real world, we've been between 60 and 80, and we spent most of the time between 60 and 70. And will this start to break down further? This is a daily chart. Let's just bring up a weekly chart and take a look at this. But you'll see this pattern now. This is where my cursor is right now, is around $66. So 66 up to about 8. Here's 84. These are right in this pattern. Every time we come down, we bounced out of here. The forecast is for stabilization, but there's still quite a bit of downward pressure. So this is likely to continue down. Let's take this is weekly, by the way. So we're not looking at the short term, but this is a weekly chart. I'm just refreshing this so we can see the patterns on the PPMs. Yeah, so this is a weekly trend. So nothing big here. Inflation's ugly head isn't going to come here. On another live stream, I'll talk about we go down the road, we'll talk about some of the inflationary expectations, but right now they're minimal. So let's do gold. Haven't done that for a while. Gold has an interesting pattern here. And we have some live Fibonacci targets right now. And you can see the forecast. I'll just leave the WTR forecast up there for the moment. But you can see these are forecasts for moving averages getting 3,300. The upward targets on this market is 33.46, 36.54, and 38.44. So it looks like this acceleration is kind of real. We are looking at some flatline action here, since we did hit that we printed 30.47, and if I go to the daily, I think you'll see some interesting patterns there. We have current Fibonacci targets now. Let me blow this up. You can see the values are over here in this box over on the right. It shows WT. There was a typo in the indicator. It should be fib ratio. It's Feb ratio. That's how it shows, but it is 32.21, 33.65, and 34.50, and this is the targets off of the daily chart. Yeah, there's yeah, I'm just looking at a couple of the comments here. Yeah, just reading a couple things. Bear with me just a minute. Yeah, I'll finish this gold thing. I think Green Garden Capital, you're talking about, can you show us what's the difference in the wave tech between daily output and weekly? They're just different models. One's intermediate, one's long, so short term versus long term. I don't know if that's really the difference, is the patterns that are held on the dailies are typically 35 to 50 days. The patterns on the weekly output is 200, around 200 to 250, which is about a year. So they're just different algorithms that are running on different time series. That's the primary difference. Yeah, so let's go to let's take a quick look and go long term on this, since I haven't covered it for a while. As you'll see this parabolic move on gold. By the way, did Trump and Musk ever go to look for the gold? Did they ever do that? They were going to do that, and I saw Trump going, "Well, I hope it's there. There should be a lot of it." So, but yeah, so that's something there. I don't think they ever went. I certainly didn't hear much about it, if they did. But this gold parabolic curve, this is monthly. Looks like it's going to top out somewhere around 3,400. So if we look at some of the fib targets that I was just talking about, they're all 34, 36, 3,600. So that's probably going to be the peak. This chart we're looking at here, let me bring up the algos. Yeah, they're going to stay positive, yeah, right into November of this year, looking at monthly. But even then, once they start to lose momentum, they're going to have so much upward momentum that 10-month moving average is currently at the it's currently at the three. Hang on, I'm just trying to get the right one. It's currently at 2682. And it's going up right now about 200 points per month. So that's going to drive us up. This is going to keep enough momentum going that we'll be able to see the support coming into play. But gold's definitely a long-term hold, and it's still going up. It's been pretty phenomenal last run, especially from 24 going forward. I'm just looking at the futures right now, up 18 handles. So I'm not looking up at the sky. I have 4 monitors here, and I've got my PC up on top and this Mac down here. But this is so there's a pretty big bid coming back in to the market, but we almost see this every night. And those of you that are hanging out, anyway, there's a pretty good bid overnight right now. We're up 0.3, up 1775 on the June contract. And I did roll over, you notice, on the Substack to June. So it was a fairly decent rollover. It was interesting when we rolled over to the March contract from December, there was a big gap, and that big gap represented the top of the market at the time, and we got a pretty good pullback after the rollover. This one doesn't seem to be presenting us with the same issues that we had in the last one. Let me just see some of your comments here. Yeah, I see a couple of comments. People are going on. So yeah, let's do Bitcoin. I'll come back and we'll chat for a few minutes. We're at 52 minutes. I try to keep these to an hour. Got covered a lot of stuff, so let's do Bitcoin. Let's move this back from monthly. You know, I've had some interesting conversations with some friends of mine and talking about this, but this whole consolidation that we got once we hit 100, talk about massive, distribution going on. I mean, it was huge. And I keep telling everybody, some folks seem to be excited. I guess if you're Michael Saylor, you're excited. You're always excited, even though, he's been buying all the way down. If this thing breaks, there's some key numbers here. You'll see this. Let me get off screen so you can pay attention to that. There's a green dot right here, these dots. This is a pivot, and this is the number I want everyone to pay attention to. The red dots are showing there's still some downward pressure. If we played out these algos way out in the future, I don't think they have very much validity, but I do think this range down here is fairly true. But if we get through this pivot, which is 71,000, we're going to 400. I'm going to round it down a little bit. If we get through that number, then the next phase will be the 200 week. This is the weekly chart. 200 week moving average, which would put us at 47,000. and that's going to be 50% retracement. That's going to break. If we look at the pattern, there's also an argument, and off of this low. Let me draw it in so everybody can yell and scream at me and tell me I'm wrong. But let's do this. So just off of this low, there's argument. I'm going to draw in some little lines. 1, 2. We'll call it 3, 4, 5. This is going to be number 1. A, B, C, number 2. And then 1, 2, 3, 4, 5 up. This would be wave 3. And now here's the key. I'll come back up on screen here. This is the key of this particular pattern that I've got up here. As I always tell you folks, there's a lot of bad Elliott wave out there. And I'm just going to tell you there's one factor that usually happens after you get 5 waves up. You typically will get a move back down to wave 4 previous degree. This is where this was 1, 2, 3, 4. We did not, this is the other rule right here. So we came very close. I do not believe we overlapped. So there's an Elliott rule that says wave 4 can never overlap wave 1. So if the bottom of wave 4 drops below that level, I'm going to look at this right now. I can't get the numbers. It may have come very close. If it drops below that number, then it has to be a corrective wave, not an impulse wave. But this looks like a clean 5 wave. And then I'm going to clean this up so we can take a look at this other pattern here. So now if this is 5, then you get AB, we'll call it ABC, and then you get a giant wave 4. And this was fairly complex. So there's someday I just need to do a video on all the basic Elliott stuff. But there's a rule of alternation, it's called. So if wave 4 of the previous degree was simple, then the next wave will be complex. If the previous was complex, then the next wave typically will be complex. So we have to. I think I painted myself in a corner here, so I'm going to stay with this thought to get it out. Let me just let me close out something. I need more of the chart. Yeah. So the argument would be, going all the way back, I'm getting off screen here so I can do this, that this early day, so I'm going to redraw, we're going to go back to the next degree, is that this pattern here is likely going to be a big consolidation. But if we look at the forecast here, what are we looking at? Weekly chart. We're looking at ultimately coming down to this 200-day or 200-week moving average. And so let me bring up the tool again. Yeah, so like I said, this is the 1, 2, this is wave 3, this is a complex 4, 5, and I think this is a bigger 3, so you should get, this is kind of a 1, yeah, that won't work. Hang on. So this pattern here should then, it's already been down. Down here, we should get a rebound and then some kind of consolidation. And like I said, ultimately, if we get through that 71,000 number, I'm forgetting the number, I'll have to bring up another chart. But if we get through that that pivot number. It's right here, actually, 71,400. If we get through that, then we're ultimately coming down to here, which would put us at the 44 to 51,000. So basically, what I'm trying to tell you here is you're probably going to get potentially a 50% retracement. Doesn't mean that we don't rally back into the 90s, or we can press all the way up and even make a new high in this pattern and then get a big rejection from there. So there's a lot of latitude to move around, but the bottom line is this thing is probably going down. So I was going to go down this trail. Where are we at? We're right at 1 hour, so I'll wrap this up. But basically, all of these ETF guys and the option guys, everybody, and Trump coming in, and we're going to have a reserve of Bitcoin and crypto. I don't think any of those things, if I was a pure crypto believer, I don't like any of that stuff. Okay. I just don't like it at all. And, yeah, I hear you, Tony, on the gold. It depends. I think it was you that's been yelling at me, and not in a nice way, to get it back in. But let me finish this Bitcoin thing. All of these players, these institutional players that everybody wanted in to, I'm doing air quotes, legitimate, make Bitcoin legitimate, is potentially a really bad thing, because now you have all of the, I'm going to call it the bad guys. You got all the Wall Street guys in there. And then you got the government going, yeah, we're going to be in there too. So once they get enough of a foothold, I know a lot of people go, oh, these governments are going to buy in. I don't think that's what everybody was. I could be wrong, but I've been watching this space for a long time. I do cover it every day in the newsletter. And let me just come back here. I do cover in the newsletter every day. I just don't think this stuff is good for the scenario of, Bitcoin being $1 million, or Kathy Wood or somebody, or come up with those scenarios, Tom Lee, all that stuff. I don't think we get there that way. I don't think, I don't know. I really don't know. And like what I am seeing though is these technicals that I was just showing you, that's right here, is that this is healthier maybe for long term, but for right now, the short-term analysis on the Substack is probably going to be the most useful from that. I think I have one thing I want to show you before I go. Let me nail this down, and then we'll call it quits. Appreciate everybody showing up. So this is good. Please, please, please hit that like button before you leave. We need 1,000 likes. When I come up, we need at least 10,000 plus views, and at least 1 out of 10 of you folks coming up and hitting that like button. Yeah, I saw that Tom Lee comment. That guy, I don't know where they, I've been, he's like Jim Cramer to me. I don't know. I've never seen his company Fundstrat do anything special. He's just a talking head that shows up and he says stupid stuff. And every time he's talking, he's one of those people that does does this little thing with his mouth in between sentences. I just want to slap him. Anyway, hard enough, Bob. Calm down. Okay. But yeah, so I mean, there's nothing that says it has to be equal to gold. I mean, that's just selling your book. That's all that is. I'm just looking. Yeah, like I said, I can see so far. I have no idea if gold will hit 20,000, whether it's about to hit an all-time high. I have no idea. I do know that there's as much gold as you want out there. The biggest restriction has been on mining, trying to get mines approved. That's pretty funny. Yeah, that's thank you for that, Moonbee, from all four accounts. I love it. Yeah, yeah. I mean, I'm telling you, we live in this world where we see these media talking heads. They have these people who are willing to come out there and say anything to get promotion, right? Um, I can't tell you. I've had multiple people that even work for me, or have I've mentored at some stage be on CNBC, but I've never been there. Last time I did anything was back in the Financial News Network, back in the day. I did do some appearances there many years ago. It'd be fun to, if you could pull those out of the archives. But anyway, folks, hey, listen, thank you so much. I'm going to try to hit these on Tuesday. Try to bring in, this was a good stream. I think we hit on a lot of markets. We were able to get through a lot of stuff, and I was able to interact with you a little bit. Yeah, hey, Harry Toe, good to see you. It's fun seeing a lot of names that are always on the streams. I'm just looking here. See if there's anything I want to clean up with. You know what? We'll just call it quits here. Appreciate it. Yeah, just trying to get some things back here. So go ahead and make sure you hit that like button before you leave. We'll see. I think there's probably a fair amount of people, close to looks like rotation wise, better part of 1,000 just on this live stream. Not consecutive, but a lot of people have been coming in and out of the room. So hopefully you hit it. Yeah, I wish it was a vacation and more personal issues than that. My health's good. That's a good thing. Appreciate it again, folks. Have a great night. Just want to get closed out here, and we'll definitely see you again at least next week. Good luck with the Fed thing tomorrow. If I see anything, I'm around. I'll try to maybe make some Twitter post or something that maybe will be helpful. Yeah, somebody's just real quick. Hey, Chi-Town Tony, thoughts on the Fed stopping QT? I don't think so. They need to get rid of those securities. I think they'll continue that, but I don't think anyone's focused on that. When was Kramer crying? That's interesting. Yeah, anyway, listen, have a great rest of your evening, folks. Appreciate you coming in late at night on the East Coast and around the planet. So I appreciate it. Take care. We'll talk to you real soon.